a special guest for today who's joining in, in our studios right here, and he's come down all the way from Australia. Peter McGuire, CEO, Exim Australia. Great to have you in the studios once again, Peter. I remember last time when we spoke about crude, it was pretty volatile. But this time around, crude has been pretty much ranged, right? Between that $78 to $82 a barrel. We've had Middle East tensions, we've had Red Sea disruptions, and we've also had the China slowdown playing out, right? But crude has remained pretty much range bound.
Absolutely.
But going forward, do you expect a breakout from these levels?
Well, good morning and lovely to be here in Mumbai. I think it will probably move to the upside, and I think there's a number of reasons for that. First off, you've seen that US dollar come under some major push to the upside because of the rate cuts that we thought were going to materialise in March. The geopolitical tensions seem to be not really subsiding too much. And in actual fact, they may even escalate from here. So we've just got to see where they roll. Also, we're looking as far as what's going on with Ukraine situation and Russia. We're conscious as far as other geopolitical concerns. And overall, I think that the appetite for crude is going to be stronger from here as far as dollar-wise, so I won't be surprised to see a couple of dollars higher in the short to medium term.
So what is the level that you're penciling in? Would you say that we could make a dash at $90, or that's a far out
Well, it depends
target?
on the geopolitical concerns, depends on things, whether they escalate from here. It's been a slow start to the year in a lot of ways because, as you mentioned, it has been very much range bound over the last month or so. But I think that there's a nudge higher, and we had a little run up over the last couple of weeks and then it pulled back. And I think it's going to, that edging up as far as where the range sits, probably more that 78 to 85, and it may even hit 90, I'm not sure. But I think it's an incredible market at the moment to trade because of the volatility that presents itself.
Right, let's talk about the demand supply dynamics, right? International Energy Agency has raised the demand forecast for the year, and that was for a third month in a row. But do you expect more, OPEC cuts going forward, or do you think that's out of the way for now?
Well, I think that where you sit, Aramco came out and they pulled their from 13 million to 12 million. So there's the first part as far as the Saudis. The second part is I think that they want higher prices. So that's going to be interesting how that plays again into the end of the first quarter and running into the second quarter. And all of those factors will, I think, present themselves to possibly OPEC on where it sits. If OPEC look and they say, well, we really do want a higher price from here, then naturally I think you're going to see consistent cuts as far as production, which in turn will probably push up prices higher.
Right, let's talk about other asset classes now. Gold, it's holding up above that $2,000, mark. But, if you look at the US 10-year yields, they are elevated, right? 4%,
yes.
In excess of 4%. But do you think that will take off some bit of appeal from gold, which is looked upon as a safe haven asset? Well,
you've got to look at where also that US dollar index is. It's above 104. It's only just a touch above it at the moment. But yes, it's very range bound. It's again that 2030 up to 2070. It gets to a little bit higher and then it pulls back. So it's just offering, I think, from a trading perspective, big swings, which are nice for a trader. As far as upside potential, yes, I'm looking as far as we've got data releases this week. We've got issues as far as I noticed one of the banks in the US had a really big pullback as far as price, 50%. So all of those factors as far as commercial real estate and debt, the property market in China and alternatives, with Bitcoin above 48,000 now, I think that there's going to be an attraction that maybe people are looking at, just as another asset, a very significant asset class, and don't take your mind off the central bank buying, which has been enormous, plus consumption from India.
What about equities as an asset class? Now that the Fed rate cut timeline may have been pushed to the second half, equity markets were penciling in a five rate cuts this year, but that ain't happening because the Fed chairperson himself has indicated that we could wait more, to dole out a rate cut. So in that sense, do you think we are in for a correction where equity markets are concerned?
Well, look, it's been you can't deny it. It's been just extraordinary. What we saw from this time last year, or even 13 months ago, and what we saw again from October, November and December were just outstanding. Who could have thought that the S&P would, smash through 5,000? So there's the, I was only a little while back and it was 4,500 and people said, is 5,000 achievable? Yeah, it probably was, but it's marched forward very, very quickly. So any market that goes up as quickly as it can have a pullback. We've just got to see what goes on as far as CPI, how the job numbers are, US dollar, and there's a number of other factors also, those geopolitical concerns and global consumption. And inflation really, in some ways, yes, it's pulled back a little bit, but it's still very, very high with savings rates at extremely low levels back to 2007, 2008 for the American consumer.
When you speak to your clients, anything that you are hearing about US tech? Because, of course, we've seen US tech rally quite a bit, but we've seen stake sales coming in, right, for Meta, a case in point. Do you think the US tech rally has peaked out for now?
Well, all I know is I look back at last year, it was at 10,000, just over, and now it's just under 16,000. So, it's been extraordinary. It's 60% up. Markets do get exhausted to the upside. We saw those poor numbers coming out as far as Tesla. I just want to see, this quarter's performance. I want to see next quarter's performance. And, as the earnings are released, then you get a true indication as far as consumption. But at the moment, there's strong spending and there's strong consumption. And that really is demonstrated by share price and, of course, the attraction of that Magnificent Seven. Though maybe they're not as magnificent. There's one that's not as magnificent, and that's Tesla. So we've just got to see how that materialises, and that will tell you the picture as far as stock pullbacks or a continued rally to the upside.
Since you are in India, let's talk about Indian markets as well. We've hit new highs as well here.
Yeah.
But now we've turned a little bit of, into range-bound trade. And there's bouts of profit taking as well. But within the EM pack, emerging market pack, how is India looking to you?
I think it's extraordinary. I was at a presentation the other night with President Modi, and when you're talking about, the railway, like what's happening infrastructure-wise, have a look at Mumbai. It's just everywhere you see is cranes, construction, building, use as far as base metals in everything, from roads to tunnels to to tracks. So when you've got that sort of growth, it's very, very hard to really see an end game, because I just think that it's going to be very strong over many decades for India, because it's moving at such a pace. You've only got to look at your GDP. You'll be the third largest economy shortly in the world. It's just extraordinary. So yes, it's range bound, but look, that's not unusual. Markets get to a point and they even out. They take a breath. And sometimes they get exhausted to the upside, and I don't think that's India's case at all, but it's just taking a breath. And it's sprinting hard, and sometimes you've just got to sit down and just relax a little bit and wait for that momentum to build again. But there's certainly, huge consumption internally, and it's a dynamic country.
Right. Lastly, you mentioned Bitcoin, right? We've hit rock bottom. Now we've, come back to $48,000, right? Between gold and Bitcoin, would you take a pick?
Oh, I think it's got to be both, when you're looking at that. The reason why is that gold is such a huge attraction. You're talking about an asset class that's been around for millennium. So there's thousands and thousands of years, whereas Bitcoin's, maybe 10 years. I don't know the actual number, but no, I can't say that I think gold is just a huge component to any equity, any market. Not only market, but a substantial part of our wealth and the way that we deem things is very much gold-centric. As far as Bitcoin, it's alternative. It's outside the central bank digital currency. So this is the attraction for many investors globally. They want to be a part of the Bitcoin storyline and other coins. 16,000 last year, now 48. It's just enormous, and I won't be surprised for it to, nudge 50,000 very, very shortly. So there seems to be plenty of momentum to the upside for Bitcoin.
Right, plenty of momentum upside on the upside for Bitcoin. With that, Peter, I'm afraid I'll have to let you go at this. But it was a pleasure having you in the studios, and I hope you're enjoying your India visit.
I certainly am. Thank you, Nandita.
Thanks a lot.